Hello, I am Badini Ariyam. This presentation is about best ways to get funding for a startup. Yeah, a business cannot survive without proper funding. That is the important thing for a business. What are the primary sources of finances for a business? Personal, if you have some savings, you can use that for your business. Loans are not good to get for the business because you will have to pay on time, otherwise it will affect the business credit. Also you have to pay interest back. That's expensive. Fundraising, crowdfunding. The fundraising, one of the easier ways to fundraise is crowdfunding. Crowdfunding can help you fundraise as donations from anywhere, everyone who knows you and your business, which you do not have to pay back. Invoice factoring. Invoice financing is when you invoice a customer, you receive a percentage of it as a loan from a lender. It could be a bank or an invoice financing company. You will receive the payment within 48 hours of submitting it. It suits small businesses with large customer base, with many outstanding invoices. Partner. It's always good to choose a partner for your business. Partner needs to help you financially, physically, and emotionally to help you run and grow the business. Investor. An investor is a person who commits capital with the expectation of returns for their investments. Asset finance. Asset refinancing is a loan secured against assets a business already owns. Based on the purchase equity, the capital this frees up can be used elsewhere in the industry. So these are the things you need, primary sources of finance for a business. Slide number 3. Who is an investor? I have told about an investor. Investor is a person who commits capital with the expectation of returns for their investments. Documents to present to the investor. Documents are business plan, where you will describe everything in the business plan, cash flow, budget, and financial statements about for your business. These you should keep it ready with you. When the investor asks you, you should be able to present that. Where can you find an investor? Send emails to the investment companies. Find someone from investment companies and contact them in person. The mostly has connections on LinkedIn, Twitter, Facebook, etc. Meetups are an excellent place to meet them and say hi. I get invitations from investment companies all the time, but I cannot respond because I have no time. You can join the Angel Investment Network to find an investor. People search for investors on LinkedIn and Quora. Also, crowdfunding. You get access to free money. Therefore, do a Google search to find the best crowdfunding sites, and there also you can find an investor. Agree. If your pitch becomes successful, you need to go to an agreement with your investor. That is essential. If anything goes wrong in your business, the investor can demand asking you pay back everything in full. It could be the other way. If you make a considerable profit quickly, the investor could expect you to pay a most significant portion of the profit, leading to a huge problem. All what you earn, you will lose. Therefore, you need to have a written agreement starting when you start with an investor, and start with an open agreement monitoring what this agreement is for and the parties involved in the contract. What makes an investor to dislike you? You are trying hard. I'm sorry. What makes an angel investor to like you, not to dislike you? Sorry. They will like you because if you are organized, if you show real interest in your business, they will like you. That is the normal thing. When you start your pitch, the introduction must be good and impressive. It should be impressive. Short pitch, slides, paying attention to the listener, show you care about your project. Don't stop when you pitch. Explain short. Speak in a subtle way. Practice pitches a lot. Keep proper connection. Look at them. Structure your pitch. Gather feedback before. When you are preparing the pitch, you have to get some feedback from some of the people before you meeting the investor. You are different from competitors. You have to show them that you are different from competitors. It's not the same thing you are doing. You are different. You have to show the potential growth, how much you will grow, how much you can grow. You have to show them. Show you how you serve your customers. That is also very important because they will like to know how you are serving the customers. Investors are smart people, so you got to be careful. Further, the business discussion should not end there. There should be a call to action, but the invitation you have to make and ask the investor whether he or she can join you for a cup of coffee or a meal. They will be happy. If they are happy with your pitch, they will be happy to join you because they have an opportunity to learn more about you. Why are sources of funds necessary? The different sources of funding include retained earnings, debt, equity capital. Retained earnings are the money left over in your business. If you do the calculation, if you are running a business, do the calculations at the end of the financial year. And if there are any dividends you have to be paid back dividends. You have to take that off from the profit. That will give you the retained earnings. The purpose of the retained earnings, there are various purposes for retaining, including buying the new equipment and machines, spending on research and development, or other activities to increase the company's growth. Putting your savings into the business is advisable to give you more income later on. Debt capital. If the business needs money, business can borrow from banks or lenders to use it for capital expenses. Debt financing may include secured loans such as mortgages or leases. You have to pay back the loan with the interest. That's the important thing. Equity capital. You look out for investors interested in your business and want to become shareholders. That's what you're trying to do. Buy shares from your company and make payments for claims. Some investors pay your money without becoming shareholders, expecting the return as a profit share. Not everybody wants to buy the shares from you. They don't want to buy the shares from you, but they expect the return on expect a profit share for their investment. Slide 4. A guide for startups. Guide for startups to fundraise for their business. And how they can start up open stages, startup launch platforms. There are unique platforms to help with the information, examination, and support regarding the startup process. That includes ways to connect with investors. Companies like Startups Go is providing a convenient channel for efficiently locating investors. And there is another company also, it's called Gust. It's a startup of a new platform invested with 1.8 billion already invested in startup businesses. They are great businesses platforms. You can contact them to get money from them. Angel networks. You can find an angel investor who will invest in your startup and sit on your shoulder, offering mentorship, solid advice, and providing access to their network of contacts. Places to find funding: Angel Capital Association and Angel Investment Network. You can find them there. If you are looking for an investor near you, the Angel Capital Association has a directory, and you can go through the directory and find the investor in your area. That will be convenient for you. Charity crowdfunding, Kickstarter platforms, they also fundraise for you. They help you to fundraise. At the same time, they can find an investor as also. Incubators and accelerators. This is a platform. You desire to set up and grow your startup work with a breeding place or an accelerator pedal that gives you a host of investor resources to watch that business grow to become successful. The interest of these investors is in taking a more significant role to make you change your idea into a great business model, and give the funding sources to make it happen. And also they have done about 1.8 billion on these breeding places, accelerators and incubators. At the same time, they offer you a place in their office because they want to work with you to ensure everything is going properly. That's it. So you can look out for an incubator, accelerator from the National Business Incubation Association. Offers a list to find an incubator in your area. Most of the areas they have in the cities, they have incubators. You can go through, you can Google and search for them also. Small business administration. Established foundations like Small Business Administration are helpful and a good source of funding because more programs have developed to accelerate the nation. They want to improve their country. That is the idea behind that. They principally offer small business loans, and they give you grant also. You can get the grant for your business. Grant, you don't have to pay it back. It's a free money. Still, these loans or gifts are what you need and are available with fair terms without having any restrictions or outlook that they will get share in your business. They will not come for a share in your business. Professional social networking sites. Apart from LinkedIn, what is the other place to look for investors? Numerous professional social networking sites launched to provide a connection with all types of investors and help connect from many industries with specialty and business divisions. Many expert interacting locations can connect you with investors from other countries as well. They find investors from other countries because it's a worldwide. They spread their companies worldwide, so they can find investors from worldwide other countries. So the other countries will take, when they find it, they take a product or service and sell it and promote it in their country. So your product will be going to a lot of countries like that. Some expert interactive societies to consider for investor connections include X Factor, Zing, Plaxo, Startup Nation. There are so many other. And Meetup also. This Meetup is very common. They do this. Meetup has all type of people from all over the worldwide. So they can connect you easily with an investor in one of those countries. Provide equity firms. Consider the traditional path to investor funding. You may need private equity firms to give you access to everything from a few thousand to $1 million in investment, primarily to those startups considered to be an early stage with excellent growth potential across a wide range of industry. The objective is to sell their stake a few years after investing in your startup to reap a significant profit. That is the idea behind that. Online lending platforms. It is challenging to get bank loans, but online lending platforms have other options available nowadays. This can be a peer-to-peer. What's the meaning of this is the big firms, big companies, they want to help the startups. They offer the investment, so they can get a profit when the startups grow. That is the idea behind that. These can be peer-to-peer platforms and non-traditional lending sources, besides large investors looking to help startups make their profit. That's why they will apply their lending terms. They will give you the lending terms also. Personal marketing effort. In addition to your efforts to find investors like this for connecting with other companies, you can get them through your marketing efforts as well. So, if you are a writer in Quora, if an investor sees your work, and if they find it very interesting and worthwhile, they will try to connect with you because they want to invest in you, in your business. That's what it happens. They will check everything. They will check your website. They will check how you are dealing with the social media, and all that. They will check it, and if they like it, the people might become interested in reading your blog posts, guest posts, and traditional media outlets. That is how you can find a investor. Friends and family. Friends and family, if you have friends and family who can lend you the money, that will be a better one, because it's easy, and this is not too much work. Only thing, you have to prepare a business plan in advance. You have to explain to them your business idea. You have to make them trust. You can have trust in you. Otherwise, you will not be able to get it from them. If they don't trust you, they won't give you. They have to trust you, and trust you as a hardworking, genuine person. Then they will give you the money to start your business. So these are all the ways you can get the funding for your business. What makes an angel investor dislike you? Your pitch should contain the things like this: opening, problem, solution, business model, team, call to action. If you don't have these things written down properly, the pitch, they will not like you. If they don't like you, there is no business. That's why. So opening means how you will open your pitch to them. When you open the pitch, if you make mistakes, say there is no eye contact, or you just ignore the listener, then they will not like you. You are not mentioning the problems. You have to mention the problems as well. At the same time, what is the problems you found in your area where you live, where you are starting the business, and you are offering solutions for those problems. Then it becomes a business model. What is the business? What's the type of business model you are creating? Have you got a team? What is the call to action? How will you set up the business? That's how. If they don't find anything, if they are not happy with any of these things, they will not like you. That's the reason. How to impress the investor? Who are investors? How to impress them? Are you trying to find funds for your business? You will ask yourself, do I need to attract investors? You have to ask yourself whether you want investors. Can I manage with the money that I have now? Will it be helpful if I attract investors? What are the financial projections? What is the company's exit strategy? You have to know all that. How to impress an investor? Must show the genuine interest in your business. As a proof, must prepare business plan. Business plan should have operational plan, marketing plan, financial plan. Then the financial plan should include a budget forecast and a gadget and a cash flow. If no investor becomes interested in your venture, your business plan helps you show your investor the seriousness of your project and see the validity of your experience. When you are showing the business, when you are explaining everything, everything is okay. Marketing, operational, everything is okay. But it's important, another important thing, you have to show your experience in the industry. That is one of the big thing. If they don't see the industry, if they think that this person is going to setting up the business now and trying to learn from it, that is wrong. Before setting up the business, you must have good experience for them to accept you, for them to like you. When you prepare your financial plan, it shows the financial needs that your business, for your business. That allows you to decide whether you need an investor. Yes, before meeting the investor, you can make the decision whether you need an investor or whether you can manage the money what you have. That's very important. But having an investor is, if you select the proper investor, is good for you. It's better. Slide 7. Find the best investors for your business. Growth of business investors in this country. How to pay your investors. You have to know how to pay your investors. That's what I told at the start. But you have to create an agreement. You have to draw up an agreement. And there you should say how you will pay the investors. Advantage of business investors. The investors search for business and check whether they can make money from their investments. That is the important thing for them, whether I can make the money from this business. That's what they think. So in this way, both parties have substantial gain. When they think like that, they will ensure that your businesses will do well. So that means both parties have the gain. You are gaining. They bring in their expertise to help in the business in addition to their capital offerings. They will give you the capital, at the same time they will share their expertise also with you to help you to grow your business. That is a big advantage. The business investors expect payments from the business once they succeed and afford to make payments. Once you are successful in your business, they will expect the payment immediately from you. Disadvantages of business investors. There are disadvantages also. The owner must share the profit with the investor. Some investors try to take control of the business and implementing their ways of running it. That is wrong. If you are not careful and strict with the investor, they will try to take over your business and you. Investors might have an idea of selling their shares, so they will try to restructure the business. That's all. That will become a big mess for you. Startup businesses might become impatient because of interference from investors. You should have the patience also. You must be very careful, clever, and you must have the patience to deal with the investor carefully. How does an investor help in the business? That's what I have so many times I have spoken about it. How to choose the best investor. That's all. You have best investor. You look for the qualities they have and what is the type of interest they have in your business. That's all. Invoice financing. What is invoice financing? Understanding invoice financing. Invoice financing from the lender's viewpoint. Invoice financing is when you issue an invoice. I have spoken about this before. When you issue an invoice to a customer, you will receive a percentage of it as a loan from a lender. It could be a bank or an invoicing company. You will get the money within 48 hours of submitting the invoice. It's invoice financing from the lender's viewpoint, because They are giving the money to your invoice, so we have to look at their viewpoint as well. Lenders have an advantage from this type of transaction because they have some security. Some lenders are forced to give money without security. That is dangerous. So in this case, invoice financing, they have a security. Your invoice is there for them to get the money. It's a security for invoice financing. Usually lenders, they will not take a risk 100%. They will give you a percentage of that invoice for you within 48 hours. Invoice financing only eliminates some risk since a customer might never pay the invoice. Just on invoice financing companies, they will check your credit history and your customer's credit history. If they are happy with that, all that, then they will consider giving you the money. That's the important thing. It's a type of financing that small business might find challenging to obtain from reputable lenders. But you should try many funders to see success. It's not easy because they will check everything before they take over, before they give you the business. I hope you like this presentation. Thank you very much for my presentation. Thank you very much for watching my presentation. I hope you will make the best use of the points in this presentation. I wrote an ebook, Best Ways to Get Funding for a Startup, to help anyone who wants to start the business. I have got the link for the ebook. I will leave it in the video area. Thank you very much. Thank you. Bye for now.